Hi, Jonathan York from Bay Financial Partners, looking at investment markets. Big news out of the States was that the Senate failed to impeach Donald Trump. The vote was 57 to 43. They needed 66 there to get they crossed the line and find him guilty of the impeachment charge. What was more interesting was that most of the Republicans obviously voted against on sort of party lines, and the reason why they voted there was apparently it was a constitutional issue that they couldn't remove Donald Trump as president because he was no longer president. You then had the bizarre situation where Mitch McConnell, who was the Senate Majority Leader, came out and in a speech said there was no doubt that Donald Trump was responsible for the riot. He was inciting the riot, and he was direct responsibility for that for the actions of the mob. So now that that's cleared up and out of the way, obviously Congress can now move on with a more important and pressing situation of getting the US economy moving, and obviously the response to COVID. The new administration has been much more sort of proactive in getting those vaccinations out, and it's really quite interesting now to see the cases in the US. A couple of weeks ago, those new cases in the US were running at around sort of 240 to 250,000 a day. Now it's currently down to around 85,000 a day. Now, it's still obviously a big number, but it's a huge drop. Obviously, as you're starting to see more sort of restrictive policies put in place, but also as well the rollout of the vaccine. And globally now, we have more people vaccinated than have actually caught the disease. So if you look at the US economy, it's still pushing on at a pretty good rate. You've got stock indices, most noticeably also the Dow Jones, hitting record highs. And with the earnings season now just about done, about 80% of companies beat their estimates, and their guidance for sort of certainly the second half of 2021 was pretty encouraging. So if you look at the very accommodative stance from the Fed, the fiscal help coming from the government in terms of stimulus packages, etc. Also as well, sort of pent up demand that hasn't been spent during the COVID. Studies point to that in the US being as much as $1.6 trillion. Savings rate in the US is currently running at around 15%. That's a very high number for the US. So all of that points to a pretty robust sort of certainly second half of 2021, and US growth should be pretty reasonable. So obviously on the back of that, and sort of projected global growth upgrades, oil's trading pretty well, just around sort of $60 on WTI and around 63 on Brent. In the UK, Boris Johnson facing increasing pressure to release the restrictions in the UK. You've now got over 15 million people vaccinated. That's around 25% of the population. Now, on the back of those vaccinations, again, the sort of cases in the UK are really falling dramatically. Hospitalizations are falling as well. There's now increasing demand for, say, for a relaxation of those restrictions and allow a little bit more freedom of movement in the UK. Certainly, that will be pretty good for the obviously for the UK economy, which really has had a pretty tough time over the last 6 to 9 months. You know, likewise in Europe as well, with the vaccinations being rolled out, you're starting to see a fall in the cases of COVID, and now it's just a question of really getting on top of that as we head into those summer months. The vaccine has reached Australia as well, and that's starting to be rolled out now in the next sort of week or so. And again, that's going to be a major boost. You know, certainly cases in Australia are really sort of pretty minimal. But with the vaccine being rolled out now, it's obviously going to give a major boost as well. And, you know, will really help that Australian economy sort of kick on at a pretty good rate. And already being helped, obviously, by the rising commodity prices and, you know, sort of demand for iron ore, etc. Here in New Zealand, obviously the big news is that Auckland's gone back into a level 3 lockdown. The rest of the country has moved up to level 2 on the back of a couple of cases in the community that are really sort of unexplained at present. And obviously hoping that the lockdown will be very sort of short and temporary. Certainly the initial signs are sort of encouraging. In fact, that the sort of testing taking place over the last couple of days hadn't really thrown up any further cases in the community. But it's still early days yet. Because while the New Zealand economy should be able to sort of shoulder the burden of a sort of a minor sort of lockdown, sort of 3 to 5 days, if that was to run into sort of 2 to 3 weeks, that will be a really further major blow to the New Zealand economy, and really would be pretty tough to come back from that. Obviously, the major sector that's being hit is hospitality, and you know, again, it's just a further sort of blow to that industry. But hopefully, it will be you know, sort of short-lived, because the government has now increased the timescale, brought forward the timescale for the vaccine that is now in the country and will start to get distributed next week. That's the Pfizer vaccine, and that is to sort of frontline and sort of essential workers out there and sort of border controls, etc. And again, that's just a further sort of measure that should sort of help to sort of calm nerves out there and really get New Zealand back on track. Because certainly the global evidence is that, you know, the vaccine does make a huge difference out there. Now, obviously, in this low interest rate environment, you know, it is pretty tough looking for income. And if you are interested in discussing what options are available, go to the website www.bayfinancialpartners.co.nz for lots of interesting articles, and we look forward to speaking to you soon.